Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja. Hello, Cashflow Ninjas. MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today. In today's show, we're going to look at the coming energy boom. My guest in this episode is David Morgan, a precious metals aficionado armed with degrees in finance and engineering. He created the morganreport.com website and originated the Morgan Report, a monthly that covers economic news, overall financial health of the global economy, currency problems, and the key reasons for investing in the resource sector. David considers himself a big picture macroeconomist whose main job is education, educating people about honest money and the benefits of a sound financial system. As publisher of the Morgan Report, he has appeared on CNBC, Fox Business, and BNN in Canada. He has been interviewed by the Wall Street Journal, Futures Magazine, the Gold Report, and numerous other publications. David has partnered with former guest and friend of the show, Minesh Bindi, to host a webinar about the coming energy boom. You can access this exclusive webinar at cashflowninja.com/energy boom. If you're interested in joining our investors group, you could go to cashflowninja.com/investors group and fill out an application form, and or email me at info@cashflowninja.com to start the discussion to see if you're a good fit for our group. And if you're living in the Philadelphia, Bucks County, and Southern New Jersey area, we are hosting a live investors meetup event every month in Newtown, Pennsylvania. For more information on the monthly event and information on how to join us at our next live event, you could go to cashflowninja.com/events. MC Laubscher, the host of the Cashflow Ninja podcast and also the president and chief wealth and investment strategist of Producers Wealth, where we help our clients integrate cash flow banking, also known as infinite banking, with their business and investments. If you're interested in learning more about how we create strategies that integrate cash flow banking and investments to turbocharge them, you can access a video series at yourownbankingsystem.com. That's yourownbankingsystem.com. David, welcome back to the show.
Well, thanks for having me. It's great to be back.
Yeah, looking forward to our conversation. I was very, very excited to have you back on. David, for our new listeners that's not familiar with you, can you please share a little bit about yourself and your background and your journey?
Oh, certainly. I'll try to keep it short. I've been interested in money ever since I was a kid, kind of almost obsessed about it. My original path toward a career was actually in aviation. I majored in aeronautical engineering in college, had a brief flying career as a contractor, working with the Air Force on a couple of projects, one white, one black. But my fascination with the financial markets never left. In fact, as soon as I got my first nickel to invest, I was like 16 years old and started. So I did that throughout my brief aviation career, but it started in becoming a kind of a newsletter junkie. I wanted that kind of the inside information, the real scoop, what's really going on, kind of a different perspective. I looked at all of them, and I found very early on that there were some good ones and some not so good ones. So I kind of separated the wheat from the chaff and followed a few. Some are still around. Jim Dines would be one. Harry Brown, which is deceased, was one of my mentors. Howard Ruff, and basically the hard money guys from, let's say, the last bull market. Most of them now are no longer around. So that's where I cut my teeth. And when I saw the opportunity to get in the financial markets, I did. I worked for a financial planner for a while. That was okay. I worked for a coin dealer for a very brief time because his practices weren't what I consider morally efficient. So I left. And then I basically branched out on my own consulting and trading for a living for a while. And then I had the opportunity with the internet to go ahead and open up my own newsletter. So I started that about more than 20 years ago. And I started basically as a research project. And one day a guy wrote me a letter and said, what do you do? And I said, well, I write a newsletter. And I really hadn't started, but I'd planned on it. And he said, great, I'll buy it. And so I started with that one subscriber so many years ago. And of course, it's blossomed into a rather substantial business when the silver market took off and was the best asset class you could invest in. My name became kind of synonymous, and there wasn't that much competition in the precious metal space, especially focusing on silver, which I focus on everything, always have, but I looked at the precious metals harder than I looked at, let's say, uranium or coal or some of these other asset classes that we visit in the Morgan Report and make recommendations on. So it took off. And then, of course, when the top came, it was my duty to call the top, and I did. I called the top in 2011, just a few days before the exact top, and made a lot of people a lot of money because I traded that market from $19 all the way up to $48. So that was a kind of an epiphany for a lot of people that basically left the markets never to come back because they made enough money to say, that's it, I'm done. From that point till now, it's been kind of a trek downward, lost about 60, 70% of the business. And we've been rebuilding over time because people are starting to come back into the sector. So probably a long-winded answer, but that's kind of my life story from start to finish.
No, it's very interesting because, I mean, there's asset cycles, right, in every single asset class. And commodities has been one of these that is now pretty much round at the bottom, would you say?
Oh, yeah. No, I mean, if you look, it depends how you measure it. I mean, you know, I'm guilty of it. We're all guilty of it if we're honest, because, you know, if you're running a mutual fund, I mean, you could kind of pick the starting and end point. Say, hey, if you invested with me in the last 6 months, look at the returns you would have made. But you're kind of setting it up to your best advantage. But if you try to be objective, and I do, I mean, if you look at gold on a weighted average, I mean, we're at like a 300-year low. I mean, we're sitting in a situation now with the mining equities at about a 70-year low. So, I mean, there's no, you know, this is from Barron's. I mean, this isn't from me. This is, you know, sources that I can cite. So absolutely, you're correct. You want to buy things that are unloved. You want to be a contrarian, or a contrarian as a contrarian. I've always believed, since I learned about how the system operated, you needed some exposure to the precious metals. But that doesn't mean everything in the precious metals. Exposure is different than I'm all in. And, you know, that's what I've taught from the beginning. I have no guilt if people do what I teach, but a lot of people, you know, they can blame me or not. I mean, it's not just me in the sector, as you well know, but they learn a little bit. And instead of learning enough to make a conscious decision, they basically get in too much. Most of the phone calls or consultations I've had over the years have been people that got excited, invested all at once instead of dollar cost averaging, bought either the wrong type of product or invested too much in one sector. And this is something that, you know, Investing 101 teaches not to do. So, you know, I've said, you know, I'm, again, no guilt. I mean, if you read my free information, just the 10 rules of silver investing, I mean, those rules apply to investing at large, not just silver investing. So, you know, my conscience is pretty clear, but I always feel bad if someone has done, you know, something based on, you know, information that might not have been the best at the time. But things change, as you say, and you've got to be on the correct side. Timing is everything. And there's times to be in gold, and there's times not to be in gold. As far as I'm concerned, fundamentally, my whole lifetime has been a time to be in gold, or my adult lifetime, because of the closure of the gold window, August 15th, 1971. I mean, I was graduating from high school at that time. And you needed some exposure to gold because of the consequences of going off a gold standard have always been rather monumentous, and we've already seen that with the 2008 financial crisis. We really haven't recovered from that, and I know we're going to talk about that later in the program.
Yeah, absolutely. It's one of those things that we look at as wealth insurance, right? It's exposure to it is absolutely key, and I like one of the other things that you shared too is the importance and the power of being a contrarian and looking at asset classes that is not loved, because right now there's a lot of asset classes that are very, very frothy, which ties me into the economy and markets where we are currently. What is your take on markets and the U.S. economy and also the global economy? There's obviously a couple of things that are happening in there. Interest rates, trade wars, tax cuts, the government shutdown in the United States that come to mind. What is your take, David?
Well, I'll start with the U.S. markets. I mean, basically, we're in a distribution pattern basis any of the larger indexes. You could look at the DJI, you could look at the SPX, which is what I usually use. And around the 22,000 level, if you look at the chart, I mean, we're distributing, which means kind of a flat line. And this is where the pros, the professionals, are offering their stocks at a huge profit onto the unwashed, I call them, as basically somewhat pension funds, money managers, and of course the general public. And then with Trump actually getting in office, it got another lift, and you saw the S&P go up from the 22,000 level to, new all-time highs. And of course, Trump said we're in a bubble when he was running for a campaign, and then after he got in office, he's taking credit for it. There may be a reason for that. I won't try to even dive into that or digress further, so I'll come back. So the U.S. markets are very, very overextended from any metric that you want to measure. And a lot of this has been the FANG stocks. It's also been stock buyback programs. And this is a pretty manipulated market. I mean, most of the extra cash or capital has gone into the banking system, and that's been pushed into the stock market. So this extra free money has just gone into the equity side for a long time and pushes things to outrageous values. Very much, I think, topping at this point, maybe topped. It's hard to tell. Time will tell. I mean, the only way I'll change my mind if we start seeing new highs on big volume. I think the top is in, but I'm open-minded. If the market says different, I'll certainly go with what the market says. On a global side, we really have to look at China. I mean, if you look at how this whole Ponzi scheme is set up, it's basically whenever you run a Ponzi, you need more participants at the bottom of the pyramid to be sucked in to keep the game going longer. And if you look at the Keynesian economic model, what you need is you need more suckers. And what really took place, and I kind of missed it initially, I didn't miss it for long, but I kind of didn't really think about it, to be honest, was when the Chinese boom started. I mean, now what happened for the Anglo-American empires, you had 1.2 billion people on the planet to get into the game. And did they ever? And so with the Chinese Industrial Revolution that took place from the early 2000s, you had just a huge amount of need for basic materials. And that's when the commodity boom really started. And so you had, everything you want to name: copper, lead, zinc, all the energy metals. Of course, the precious metals went along with it. And you had this huge surge, but you also had a massive amount of money printing that goes along with it. So the Chinese played along with the Keynesian model, borrowed money, built out their infrastructure, did one unbelievable amount of, let's say, infrastructure build out in about a 10-year time frame. Now we've reached the peak in that, and they have got a massive amount of debt. They have all kinds of structural problems because you can't basically build a strong financial system on an overabundance of something, which means free money, or basically free money. So now with the contraction in China, this is going to have global repercussions. And what this means is what I like to talk about, and it's called stagflation, which is a word that actually didn't come out until the late 70s. This was a term that was coined by I don't remember whom, but it was an idea that was really new. It was the idea that you could have a contraction in the economy and increasing prices at the same time. So let me explain a bit further. The physical economy, which really makes the world run, how much wheat is growing, how well a certain, a sector like textiles does overall. Is there more demand than there's supply? Everything across the board. The physical economy, what really runs the world, that is contracting. But at the same time, things are harder to obtain or cost more to produce. And therefore, you have quote unquote inflation, which means these things are costing more at the same time. This is a model that actually most economists said couldn't really take place. And of course, it does. So that's what I see for the global economy. I see a contraction, a slowing in the physical economy, and prices to be paid, especially in the agricultures. I mean, I don't trade in the ags very often anymore. I used to, but I mean, still, if you look at the wheat, soybean, meat complexes, sugar, I mean, look at coffee, look at all of the agricultures and the subs that are, as I mentioned, coffee, cocoa, those kind of things. You're going to see, generally speaking, over the next few years, higher and higher prices because these things are going to be harder to obtain, and you're going to see a contraction because of a lot of things, weather actually being one of them. So hopefully I answered your question on the U.S. markets and the global economy.
Yeah, one of the things that that obviously we're seeing in the news, there's a lot of populist uprisings everywhere and movements. I just want to touch on the social side of this because this impacts markets since it consists out of people and human psychology. We've seen the yellow vests out in France. There's a lot of different things going on. Obviously, Venezuela is not very far from the news, and a pretty divided country, I would say, in the United States as well. So it's kind of globally. Every kind of region has its own little things, and this is when markets are really at the top. Things are supposed to be, I would say, is good, right? Because the stock markets are up, housing prices are up, and so forth. How do you see the slowdown in the global economy play into this? Are we looking at more unrest? What do you see unfolding in 2019?
I definitely see more unrest. And if I might give I wouldn't call it a shameless plug, but take a pause here to let everyone know that there is a film. I'm in it. It's not because I'm in it. It's the film overall that's important. I feel very small section in it, but it's several well thought of thinkers about economic conditions. It's called fourhorsemenfilm.org. If you type in any search engine, Four Horsemen Film, or go to fourhorsemenfilm.org, you can see it for free. This is a film that talks about the end of the Age of Empire. And so it's an hour and a half. It's well worth your time on, let's say, a weekend to view it. And it gives like the big picture. They're not blaming the bankers. They're not blaming anybody, basically. What they're doing is showing you fact after fact after fact of how this is a cyclical situation, how it has happened over and over again in recorded world history, and where we are in that cycle and what to expect moving forward. So now, having said that, I do expect more unrest. And this is very, very consistent with the end of the Age of Empire. In other words, the metrics, what you see from the mainstream mockingbird press that puts out nothing more than a bunch of propaganda, there is a great deal of fake news out there. And that's to pacify the public. That's to say that things are great. Look at this big number. Look at this. Look at that. And it's a distraction because when you look out your window or drive down your street, you probably get a different picture than what you're hearing from the mainstream media. Nonetheless, you have those two things at the same time, great numbers, quote unquote, and yet unrest in the streets. I mean, the Arab Spring wasn't because of, being unhappy with the political situation. It happened to do with food, and these are the situations that we're getting into. I mean, not in every case in France, but generally speaking, this unrest comes from a basic need not being met due to the political construct. So it happens under different political constructs. It can happen in a communist system. It can happen in a capitalist system. It can happen in a socialist system. It can happen because it happens because basically the system is corrupt. And this is what we're seeing throughout the world pop out in different places. And it's only going to get worse. And it'll gain momentum. And of course, there's always the edge of the envelope, meaning the extreme in any movement. So there'll be agent provocateurs, for example, maybe yes, maybe no, that take advantage of the situation and go to the extreme of, let's say, a peaceful protest. That's something I totally admire from MLK, Martin Luther King, and Gandhi, where it's an absolute nonviolent situation. Well, you don't see that anymore, unfortunately. What you're seeing is some people out there with that intent, and they adhere to that, but you get the extremists that, start breaking the windows, starting fires, blowing things up, whatever. Unfortunately, that's a human condition, but it's basically a blowback to the political system at large, and it's something as simple as basic needs not being met.
And with the media firing it up, I think the one thing that really struck me was, and I don't watch any mainstream media, somebody sent me a clip the other day, and I looked at the clip, and it was like a 5-minute clip, and I had this big aha moment, where you just sit back and you go, holy moly, this is what the majority of the people are watching. So no wonder everyone's so angry. It's just stoking fires on every side of it. So they definitely have played a massive role in this whole this I would say this age of discontent, if I can frame it that way.
Oh, absolutely. And you're very accurate. And it's designed that way. I mean, it's to divide and conquer. I mean, I forget the film, but, it's the ant and the grasshopper. There's a lot of metaphors. But, I mean, if the people knew that they had the power and they all saw a common goal of overdoing this, let's say banking elite or the system as it's structured, where they basically create something for nothing and use it as a control mechanism over the population at large. And I'm not talking about a nation state. I'm talking globally. I mean, to digress a bit, purportedly, Mayor Rothschild said, give me the power to, create the money, and I care not who makes the laws. They don't care if it's a communist. They don't care if it's a dictatorship. They don't care if it's a socialist. They don't care if it's anarcho-capitalist. They don't care what the system is. As long as they are in control of the money, they have control. And that's the whole point. They have enough money. They have more money than they could ever dream of. It's about the control. And it's the control of the political structure. It's the control of the populace at large. It's control of the basic systems. I mean, why are we in a situation? I'm going to digress a little bit further, but why are we in a system where when it initially started, I was for it because I didn't understand it, the Green Revolution, and we're getting, more crop yields per acre than ever before. I mean, initially I thought, oh, how fantastic is that? We're going to, get greater yields or more efficient use of the land and on and on. Well, what I didn't realize, and of course did shortly thereafter, was that just genetically modified organisms are something that are really an anathema to the natural order of things. A lot of these things aren't even proven to be safe. And, you have basic animals that won't even touch this stuff. What does that tell you? So all of these things that have been pushed on us without our consent are things that most people have no idea is going on because, as you just said a moment ago, the mainstream propaganda slants in the direction that they want people to think. And people actually believe that they're informed. If you don't read, you're uninformed. And if you do read or watch the mainstream news, you're misinformed. And fortunately, you're not really informed unless you go to alternative sources. And even there, you've got to be careful to bounce 3 or 4 against each other to really discern what's actually happening.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. We will be right back after a word from our sponsors. My friend Dave Zook says you can be conventional or you can be wealthy. Pick one. Dave and his team at The Real Asset Investor have syndicated many successful real estate and ATM projects over the last decade. Now his team has an exclusive opportunity for investors in the coal space. Do you want to be part of an energy project that takes conventional coal and cleans it up by extracting liquids while releasing almost zero emissions? The sale of these liquids can produce strong double-digit cash flow and aggressive tax benefits against ordinary income, all while using America's #1 most plentiful resource in a responsible, efficient manner. Now that's non-conventional. For more information on this exclusive opportunity, you can visit therealassetinvestor.com or contact the Real Asset Investor team at info@therealassetinvestor.com.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the United States. Our simple, proven system will help you create real wealth and passive monthly cash flow. Learn how to find the best deals by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing at noradarealestate.com. That's NORADA realestate.com.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is the show where cash is not king, but cash flow is king. Now let's return to our interview. Absolutely. Let's touch a little bit on, we've mentioned gold and silver and the asset cycle and so forth. What's going on in those markets currently? What do you see for 2019 in the gold and silver markets?
Well, I see a good year for both the metals. And one of the things that I just got back from the gold show up in Vancouver, the Vancouver Resource Investment Conference, I said at that show, and I'll say again, that gold had to break the $1,300 level basis spot. And if you look back just in the last 30 days, I mean, you back in like the 2nd of January, it was at $1,295, and it didn't make it. You go back to about 9 January, again, about $1,295, it didn't make it. Then you go back to about 16 January, $1,295, it didn't make it. And then last Friday, bang, a $22 move up through the $1,300 level, and today's the third day above that. Volume has been decent, and that's the first precursor to starting, let's say, the next bull market. I'm not looking at anything over the top fantastic this year, but you got to get level by level. So 1,300 is a big, important psychological level, but the real level technically is about 1,350, which obviously is another $50 from here. I do believe we'll see that this year, and I'm looking for something up toward maybe the 1,450 level somewhere during the year. Of course, bearing a caveat that, something extreme takes place, then, of course, the gold market could take off and react, instantaneously. But barring that event, I see a good year. The other thing that I've always looked at is what does silver have to say about the market, meaning that for a really good bull market, you need to see silver outperform gold, which means this ratio that's been extreme for quite some time, this 85-1, we need to see that confirm, like the Dow Jones and the industrials are confirmed by each other. The transportations have to confirm the industrials. Silver really has to confirm gold's move. Gold's obviously leading, but if you see the gold-silver ratio start coming down into the 80 level, which is still extremely high, once it gets into the 75 level, we're starting to get confirmation from my work. And this is just my number. You can hold me to it or not. I'm going to say it publicly. But once you see 72 and lower for the gold-silver ratio coming from this 85 extreme, now you've got pretty good confirmation that one, silver is outperforming gold. And at that level, chart-wise, it's pretty much a good level to say, yeah, we're back into a bull market. So I'm looking for good things this year. And perhaps, depending on the global conditions, we may see an acceleration, although I doubt it.
Let's touch on the energy sector. Your views of what's going on in energy, oil, gas, coal, uranium, lithium. Can you share a little bit more about that?
Certainly. Thank you for the lead. And I started a new service with my partner, Manish Bindi, in the United Kingdom. And we have a free webinar for everybody. If you just go to the URL, comingenergyboom.com, that's comingenergyboom.com, one word, you can get the free webinar. But I've been asked over the years, what's the best place to invest outside of the metals? And the answer has always consistently been energy. So nothing really happens without energy. It is absolutely the most important investment anyone can make. And if you look at the main energy sector, you will find that there is a discontinuity coming up in the next 3 years between the amount of oil and gas produced, particularly oil, and the amount of demand. So there's a gap in this, and the gap has to be filled. And the filling of that gap, it has been taking place and will continue to do so with what's really known as the alternatives, which everyone's familiar with, particularly solar, but there's, of course, wind, and there's wave energy, there's geothermal, there's the hydrogen economy, there's even helium out there. There's the battery metals. If you're going to make a solar farm and it produces all this energy, but it isn't needed by the grid immediately and you can't feed it into the grid, what do you do with it? Well, you have to store it. So there's a whole set of studies going on how to best capture that extra energy and store it efficiently and be able to hold on to it and use it when the sun isn't shining or the demand on the grid is such and such, you need to put that energy back into use. So it's a fascinating topic. I don't claim to be an expert, but hire the right people, get the right sources, do the right research, and certainly know how to pick the correct investments from the top tier through the more speculative sections. And then what I really like about it is what Manish has done with gold and silver. And he has basically an options program where we set it up where people make a monthly cash flow. So people love that, like what you do with your system, the cash flow system. And this is something that he's kind of the master at, and we're very happy to combine forces where he's in charge of basically the monthly cash flow, and I'm in charge of more or less the short, intermediate, and long-term perspectives on the energy sector at large.
So the strategy also includes buying an undervalued asset with huge upside potential and then dollar cost averaging, purchasing it, and then producing cash flow. And then, as you mentioned before, that's one of those that you take all the way up into the cycle.
Correct. We see a huge cycle ahead of us over the next 3 to 5 years, not only in the alternatives, but actually in the oil sector, believe it or not. And this is going to be something that once it gets started, a lot of investors, your general investor is not opposed to investing in the energy sector. So there's a lot of people that kind of leery the gold and silver sector for lots of reasons, although everyone must be hedged. I'll say it again. Many never will. After this next downturn takes place, there'll be a lot of my's, excuse me, I digress, but I wish I would have owned gold. But nonetheless, the energy sector is pretty much across the board. So this is where there's a lot of money, a lot of opportunity, and a lot of situations that most people aren't aware of that can basically, if you do it correctly, speculate correctly, have, huge upside. There's, for example, vanadium. This is a mineral that's used primarily to harden steel. China is basically at a lack of it, but it also has a great potential in the future as a storage metal, a battery metal. And this is something that's being explored, and these are the type of issues that we go into in the reports.
And then there's also other energy resources or commodities. Is coltan one of it that you're keeping an eye on as well? That's used in a lot of electronics and computers and cell phones?
Yeah, there's not much we overlook. I'm not going to say that we don't miss anything. Our objective is to not miss anything. And a lot of it will be kind of a white paper kind of an approach of, well, this is hitting, the consciousness of the early adopters, but I'm not willing to put a investment into it at this point in time because, and I'll state my case, but nonetheless, we're watching for opportunities in this space. A lot of stuff, as you well know, if you look at any major, let's say, turning point in human history that had to do with a change of status. Going from the horse and buggy into the automobile sector. I forget the exact number. I'll make one up, but I think it was like 13,000 or something. Automobile companies kind of jumped in over the initial, decade or so, and of course, almost all of them washed away. So you got to be careful when something is being an early adopter. You can have the right idea that buying into the automobile sector is a very smart thing to do. It's just which one do you choose? So a lot of times patience actually is more rewarding in those type of situations. But if you take it from the approach I usually do, which is the commodity side, and you're looking for, who's going to, produce the best storage battery, and they're going to use vanadium. If I could find you the best source of vanadium at the lowest cost, that's the place to invest. So I don't care who's using the vanadium, right? All I care about is that I've got the best margin on it. So that's kind of the approach I take. Now, is that opportunity available throughout the entire sector? The answer is no, but those are for the type of opportunities that I look for.
What do you see with regards to coal? What's going on there? Because, again, there's a lot of information out there. Some good, some bad. What do you see with pertaining to that, and what do you see with regards to the specifically oil? I think the U.S. is now the biggest oil producer in the world. Is that correct?
Purportedly, yes. Okay. So on coal, first of all, I don't know how to state this efficiently, but I believe that we should be good stewards of the planet. In other words, we should be conscious about how we extract things out of the earth for our own benefit. And, there's a lot of people that, let's say, are environmentalists, but they're insincere from my perspective because they don't understand one, it's necessary, and two, that things aren't always as bad as they're purported to be from the mainstream press. Having said that, coal is extremely abundant, but the way that we process it is close to maximum efficiency for BTUs, British thermal units, heat, energy. So we're taking it out and using it so it's efficient energy-wise, but very inefficient pollution-wise. And so if you do it, what I consider consciously, where you scrub it and you burn it, where you have very little impact on the environment, and this can be done, you pay a penalty. You don't get as much energy out, but you're also being a lot better steward of the resource. So that's my take on coal. On oil, very interesting. I mean, this fracking thing is certainly taking the United States into quote unquote energy self-sufficiency, but the curves on those wells is very much like a popcorn rally. I mean, they go up extremely quickly, but they also deplete very quickly. So it's kind of like running on a treadmill. You've got to keep running faster and faster to stay in place, as a metaphor. Now, the technology is getting better all the time, and I admit that. But the basic finances on it is very easy to determine if you look at the real numbers, that in most cases it's inefficient below about $65 a barrel oil, which means that a lot of these companies are able to take on debt and produce, but they're really not efficient or giving a good return on capital. And this is something from my perspective, or a financial perspective, you've got to be aware of. So this is, again, something we look at. I'm not against it, but I'm not really that enamored with it. I think it's kind of a stopgap. And this is something, going back to the peak oil debate, which is kind of just lost interest altogether. Almost everyone now is absolutely convinced that, there's plenty of energy. Don't worry about it. And even if there isn't, the alternatives will make up the gap. But we're seeing, why would you be, mining tar sands in Canada and fracking all over the place if there was sufficient, oil as it is? In other words, why would you go to these extreme conditions to produce more? And the answer is because you need to. It is because that there isn't enough, let's say, light sweet crude running around everywhere for everybody's enjoyment. Yes, the oil price is off. Yes, I get that. But the bigger picture, the overall strategy is, as I said, and it's in the Coming Energy Boom, I won't say documentary, the webinar, where I show this, where this opportunity exists just going out a couple of years, where we're going to basically see this condition take place. And let's just look at the average person on the planet. Everyone's using more and more energy all the time. I mean, there's something like 1.5 billion people on the planet that don't have access to electricity. I mean, there's still a lot of demand to the upside.
Great. David, one habit I've observed from wealthy and successful people is that they're always studying and also always learning. What are you currently studying and learning?
Well, I'm spending a lot in the energy sector, obviously. Another one that I don't talk about, and I probably won't even write about, although I might for my, premium members. I just watched The Big Short for probably the fourth time. And Dr. Burry, I kind of empathize with him because, he was right, but he was wrong for some period of time and was really getting beat up by his investors. And but he stood his ground. He knew he was right. And of course, when the whole thing went in their favor and everybody made a bunch of money, I'm sure some people apologized and some thanked him, but some that, metaphorically gave him the big nasty, never apologized. And not that they have to, that's people. But anyway, I'm beating around the bush. He said there's only looking at one commodity right now, and that's water. Water is extremely important. I haven't put a lot of emphasis in it, but I've got some leads on some people that spend a lot of their energy, time, and effort into that sector. So I may take a stab at that. I don't know if I'd put in the Energy Stock Profits Report or in the Morgan Report or both, but this is something that very few people are talking about it. And on my trip to to Vancouver, one of the little bitty companies that I interviewed actually had an element on the periodic chart that may, and I haven't investigated it, but this is, I love to learn, as you said, help in the desalination of water. In other words, taking salt water and making it into pure water. So I got to investigate that. But it is a fascinating topic. I mean, these basic needs that we all take for granted, especially in the West, that, the supermarkets are full and there's, all these drive-through fast food places. I mean, it's, I turned 66 this year, not that anyone cares, but I've seen so much take place in like 40 years where, there was like a McDonald's here and then there was a Burger King. And now, I mean, there's just, all this stuff. And the West, particularly in my studied opinion, is just overdone. It's too much stuff and it's too much of the wrong stuff. We really have the wrong values. I mean, you look at, and excuse me for beating up people, I don't mean to be intolerant, but a lot of people, let's say, have too much excess in one way, shape, or form, and they need to get back to balance because this is where you have a happy life. Having too much of anything, usually you're paying a price for that. If you're overweight or you're undereducated or you're, doing video games 6 hours a day, I mean, nature preaches balance. So to have a really good life, one, you want to be a lifelong learner. Two, you want to remain open-minded your entire life. And three, you've got to look at yourself objectively and see where your weaknesses are and work on things that you don't want to do. If you don't want to exercise, well, that's probably a good clue that you probably need to.
Absolutely. No, I couldn't agree with you more. We do take a lot of things for granted. I was back visiting in South Africa about last year this time in January, and my hometown is about an hour from Cape Town. And at that stage, Cape Town had, I think, a month and a half supply of water left. So you had a major international city that was on the brink of running out of water. Now, they've recovered and there are certain things that have happened. Obviously, the rains were very welcoming. But it just shows you, I mean, at that stage, being there and seeing it, and living through that, it was pretty scary. So when you spoke about, the desalination of water and, being grateful for the things that we have and a lot of things we take for granted, that was the first thing that came back to my memory, is just seeing that what was happening there at that stage.
Yeah, well, thanks for that input. And that's right. Most people probably aren't even aware of that problem in South Africa. I was aware of it, but not that I look at a lot of things and certainly I miss a lot of things, but I was certainly cognizant of that fact. And, there's just so much going on. It's a very complicated world. There's a lot of forces going back and forth, but a lot of it is distraction. I mean, people really got to look at what they can control, what they need to be more centered, I would say. Look at, their lives on a personal level. I mean, I'm going to digress again, but, I was in China, and it's been years. Hong Kong, I don't count as China, although I guess partly it is. But when I was in Beijing and surrounding area, they have a saying that the emperor is very far away. So most of the Chinese, even in the cities, basically, and there's a lot of control mechanism there. I'm not overlooking that. What I'm trying to state is their philosophy or their attitude is that, yes, they have, the political system, but they still have some modicum of freedom to be able to, do what they want type of thing. In other words, Washington, D.C. might be a better metaphor, a better analogy, is very far away. What really affects your life? I mean, there's people that love Trump, there are people that hate him, but how much has it really affected your life? It's all in your head. I mean, does it change the restaurants you go to? Does it change how often you shop? Does it change what groceries you buy? Does it change the way you drive to work? Does it change how much you love your kids? I mean, all of this stuff seems to be in people's heads, that the idea that, oh, he's president, is making my life bad, or, oh, he's president, he's making my life good, is, for the most part, total nonsense. Because for the most part, it hasn't really affected anyone's life. Now, if you're in politics or you make your living because of the political system, or you write for a major news service or something like that, well, that might affect you. But for the general populace at large, it really has hardly any real effect, and yet everyone's running around as if it has this major impact on their lives, when the truth is it does not.
Yeah, absolutely. Couldn't agree with you more, David. Where can my listeners, again, watch that webinar about the coming energy boom, and where can they follow you? Where can they learn more about you? You've got a lot of great content, newsletters, podcast interviews, and podcast shows. Where can they, what is the best place for them to reach out to you and follow you?
Well, to follow the energy side, just go to comingenergyboom.com. That's comingenergyboom.com. Sign up, watch the webinar. The next step is to give us some personal information. If this product is correct for you, you will get a phone call from one of us that will basically make certain one-on-one conversation that you understand what it is, what the objectives are, and if you qualify or not. And from that point, you can start cash flowing off the energy sector. On the other side, the Morgan Report, the best thing to do is just get our free letter, and that's just go to themorganreport.com. Give us a first name and an email address. It's double opt-in, which means you have to look in your email box, get the welcome note, click the link and say, yep, I'm me, I do want it. And you'll get all the interviews I do every week like this. You'll get a weekend wrap-up every week, and you'll get Q&As and a lot of useful information. We do have sponsors from time to time that are on that service. I've got to pay 8 people every month. It's not just me sitting here behind a computer screen. I've got 2 analysts, a secretary, a webmaster, public relations person, and on it goes. So it is a real legit business, and there are, bills to pay. But regardless, I would suggest those 2 areas are probably the best to get acquainted with what I do.
Fantastic. Well, thank you so much for coming back on the show and sharing your journey and your knowledge and providing so much value for my listeners as always, David.
Oh, true pleasure. Thanks for asking me. Hello, I'm David Morgan, publisher of The Morgan Report, and as some of you may already know, The Morgan Report is about money, metals, and mining. In fact, we cover all resources from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To the point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.